All right, welcome to the Explainer. Today, we're not just looking at 6 Indian stocks, we're going to be detectives. We're cracking open 6 different case files to uncover the stories behind the numbers. To figure out what really makes these companies tick. This isn't about stock tips, it's all about learning how to read the clues.
So here's our game plan. We're looking at 6 stocks, but they really break down into just 4 core stories. You've got the hunt for quality, the tricky cyclical timing game, the high-stakes contrarian bets, and finally, those all-important red flags. If you can get a handle on these 4 plots, you'll have this incredible new way of looking at pretty much any company out there.
Okay, so just to be super clear here, this isn't about telling you what to buy. The whole point of this explainer is to help you learn to think like an analyst. We're basically using these 6 companies as our training ground to see the different kinds of stories that are driving the market every single day.
So what does it really mean to analyze a stock? Well, I want you to think about it like detective work. Every company is its own case file. It's packed with financial clues, with market signals. Our job is to get in there, sift through all that evidence, find the patterns, and piece together the real story of what makes it go.
All right, and here they are, our 6 case files. This table, it's like the initial report from the crime scene, right? It gives us a snapshot, a bird's eye view of each company. You can see the variety in size, what industry they're in, their valuation, but these numbers are just the starting point. The real juice, the real story is in what these numbers don't tell us. So let's start digging.
Okay, so our first story, it's a real classic. It's about those companies that are just fantastic. I mean, everyone knows they're great. And that, of course, brings us to the big million-dollar question for any investor. Is the best really worth the price? I mean, you know the ones I'm talking about, the darlings of the market. They've got strong growth, great management, financials that are almost perfect. The problem? The market knows it too, and it's going to make you pay up for it. So let's see how this plays out with our first 2 exhibits. Kaplan Point and Shriram Pistons. So you look at these 2, and at first glance, they couldn't be more different, right? Pharma versus auto parts. But you dig a little deeper, and you see they have the exact same DNA. They are, for all intents and purposes, financially bulletproof. Both of them have these fortress-like balance sheets with pretty much zero debt, and that gives them the freedom to grow on their own terms. Man, this quote just absolutely nails it for Kaplan Point. Think about it. They built this super reliable cash machine in markets where there wasn't a ton of competition, like Latin America. And now, they're using all that cash to fund a very careful, very smart move into the huge U.S. market. That is just a brilliant way to de-risk your own growth. And Shriram Pistons, they build their fortress a little differently. Just look at this breakdown of where their money comes from. Yeah, over half is from new vehicles, sure. But look at those other big chunks, the aftermarket, exports. It's like having these built-in shock absorbers. It cushions them if there's ever a slowdown in any one part of their business. All right, so that's our first story, the premium for quality play. But what happens when we look at a totally different kind of company? Let's pivot from these steady, quality businesses to ones whose fate is tied directly to the rhythm of the economy. So, when you're talking about cyclical stocks, think steel, think heavy manufacturing, your bet isn't really on the company itself. Nope, your bet is on the whole economy. It's a high-stakes game of timing. And if you get it right, wow, the payoff can be massive. But get it wrong, you're going up against an economic tidal wave. Okay, let's look at Steelcast. The clues here are all over the place. I mean, you look at the rearview mirror, and it's incredible. 55% profit growth. But then you look at what's happening right now. Income's heading down, and this working capital days number is going up, which is basically a sign that they're having a harder time collecting their cash. So even though their balance sheet looks solid, you can feel the cycle starting to turn. And this right here, this is the classic cyclical puzzle you'll see with a company like Maharashtra Seamless. On one hand, you've got the value case, right? The PE ratio is super low, there's no debt, it looks cheap. But then you've got the other side of the coin, the trap. Analysts are getting nervous. Revenue is starting to dry up. So what is it? A genuine bargain or one of those dreaded value tracks that's cheap for a very, very good reason? All right, now we get into the really messy stuff. These are the cases where the signals are just all over the map. You've got strong fundamentals clashing with these big, flashing red lights. And you, the analyst, have to make a call. Which story are you going to believe?
First up, case number 1, the troubled leader. This is Rolex rings. And it's a fascinating story, really. You've got this fundamentally solid company that has just slammed headfirst into a perfect storm of problems. And believe me, the market has not been kind. I mean, you look at this on paper, and the business looks awesome. It's a top 5 player in its space. It supplies all these key sectors around the world. It's got basically zero debt, and it's turning a healthy profit. Just by the numbers, you'd say, wow, that's a quality company. But then you look at the stock chart, and it tells a totally different and brutal story. Look, a 41% drop in a year, that's not a dip. That's a collapse. So here's the mystery, right? Why is there this huge gap between the solid business and the tanking stock price? What's the clue we're missing? And here it is. This is the missing piece of the puzzle. That number, that's how much stock the company's own insiders, the promoters, have sold over the last 3 years. Let me tell you, when the people who know the company from the inside out are selling their own shares, that's not just a red flag, that's a blaring siren. Okay, so that's what it looks like when insiders are selling. It's a huge red flag. Now, let's look at the complete opposite. Our last company, Man For Construction, shows us what is maybe the biggest green light an analyst can ever find. And this quote really says it all. The whole idea here is so simple. You can forget your complex spreadsheets and valuation models. This is a pure bet on the smart money. The entire thesis is that the insiders know something good, and what they're doing with their own money is way more important than what any report is saying. And here's the evidence to back it up. Look, this isn't some small symbolic purchase. We're talking about consistent, huge buying by the people running the show. I mean, one director put in over 83 crore. That is an unbelievable vote of confidence. So, unlike Rolex rings, where insiders were cashing out, here they are putting their own skin in the game. Big time. Okay, so let's zoom out. We've looked at 6 different companies, but what we've really uncovered are 4 fundamental stories that play out in the market all the time. You've got the quality story, the cyclical story, the troubled company story, and the insider story. So after all this detective work, what's the big takeaway? It's this. There's no one magic formula to analyze a stock. It just doesn't exist. The real key is figuring out which of these 4 stories you're looking at, because each story forces you to ask a totally different question. Your job isn't to have every single answer. It's to know which question is the right question to be asking in the first place. So when you look at these 4 stories, it really comes down to a question for you. What kind of detective are you? Are you the one who's willing to pay up for proven quality? Are you a market timer trying to catch the economic wave? Maybe you're the turnaround artist who loves a good comeback story. Or are you the one who just wants to bet alongside the insiders? Look, there's no right answer here, but understanding which story you're in, well, that's probably the most powerful tool you'll ever have. Thanks for joining me on The Explainer.